The cryptocurrency industry is old enough that institutional capital has started to take notice, but young enough that there are still a number of logistical and operational challenges that firms need to overcome in order to present products and services that are suitable for high volume investors. Indeed, even if a firm is regulated, there may be struggles to find other regulated entities that provide the kinds of partnerships that the firm may need to operate successfully. Finding the necessary liquidity, market makers, and even trading itself can be a challenge. Recently, finance magnates spoke with Thomas Boydie, Ryan Rupp-French, and Giuliano Benoni of Goldbaum and Partners, aka the Flashboys of crypto, about the challenges of operating as a regulated firm in an unregulated space, as well as how corporate governance structures can be effectively used to create a regulated product. Rupp-French and Benoni are co-founders of the firm, and Rupp-French acts as CEO. Boydie is the firm's legal counsel. There were some technical difficulties with the audio in this interview, so the introductions were unfortunately cut out. Ryan Rupp-French's voice is the first one you'll hear. Thomas Boydie interjects when legal issues are being discussed, and Giuliano Benoni comments occasionally throughout the interview. So can you, you kind of briefly explained what it is that Goldbaum and Partners does, but can you lay it out for our listeners, give us sort of a TLDR?
Sure.
Yeah.
So, let us try to describe Goldbaum and Partners in the most basic form, I would say. In the beginning, we are definitely a firm that is data-driven. We derive investment decisions based on statistical analysis of largest data sets. The derived trading models are executed through high-performance algorithms on a high-end IT infrastructure, so we can ensure to reduce the reaction time. So in this way, Goldbaum Partners actively participates in news trading, blockchain and network traffic derived trading, arbitrage strategies, and most importantly, our flagship ultra-low latency with its proven high-frequency quoting and hitting strategies. So that's what we're focusing on. And plus, we have it all preferably in a regulated environment. So segregation of powers is given. So we can pick up the memory of our targeted audience, so they are familiar with the infrastructure at least, if not with the asset. That was our goal, I would say. Okay. And now we are in the midst of the initial subscription period for one of our innovative and regulated digital asset hedge funds, and that's what we're doing.
Okay, great. So you have sort of this nickname. They call you the Flashboys of crypto. Can you tell us a little bit about how that sort of got started?
Well, you would have to ask James DiBiaso. It was his impression he had from us. We talked a bit about speed, about latency, and maybe that's why he reminded himself about the book he recently read. Because what we do is similar to what is already going on for a decade now on the regular stock exchange market, because we all know 70% of all the trades are done fully automatic. It's all about distance and speed. Therefore, we also have our co-locations next to the core data centers or within the core data centers of the most renowned and reputable exchanges of the digital asset space. So instead of looking at this like a victim that is exposed to the vulnerability of such a market, we see it as an opportunity in order to capture the market inefficiencies. So that's how we create value, I would say. Yeah. As we know that data is nowadays more valuable than oil. We know how to capture those data we have from the exchanges. We have an archive, and then we basically set with our sophisticated mathematical models and the algorithms. We have like an AI where we can then, after predefined rules make trades in a predictable way. And due to the ultra low latency, we have the capability of not only trading long, we also can go short, and then with minimal reaction time, we can modify or even cancel orders. So it's a millisecond game.
Okay,
And that's
I
where
see.
the Flashboys came from, I think.
Yes. So can you dive a little bit deeper into the specific kinds of data that that you guys are gathering, and are you using any alternative data methods? Like, are you using artificial intelligence or different kinds of unique metrics in order to inform the work that you're doing?
The simple answer is yes.
Okay. Okay, so can you give us an example, perhaps, of some of the data points that you're using in the work that you do?
Well, first of all, we analyze largest data sets coming from the exchanges itself. So all the trades are being reviewed by our trading team, and on behalf of that, we will build and develop our own algorithms, which will then finally be implemented into the trading venues. It's also news trading, so we know how to filter extractions of quotes, but most likely we are more into the trading area of filtering.
I see.
Right now. So we trade a lot of undervalued digital assets, which have a highly trading volume correlated to Bitcoin. And we see that at an early stage, so we can go in and out on numerous venues. And we do 100,000 of trades like this per day per exchange. So in order to do that, the trading undertaken at Goldbaum is mainly, as I said, the low latency, high frequency. It has nothing to do with the regular buy and hold strategy. Also, though we highly recommend to every retail or institutional investor that he should have a stash full of Bitcoins or whatever. But what we do requires a lot of server power. Configurations only run to produce pure volume in order to get lower fee levels, because when you do 100,000 of trades, you need the best fee arrangements in place. So we have big deposits on those exchanges in order to get those fee levels. What else do we need? We need data feed programs, we need trading order softwares, and so on.
Right.
I can't get into great details at this stage.
I'm sorry, can you say that one more time?
Or I shouldn't. I shouldn't go into details at this stage because it's still our venture.
Right, of course. But one of the things that's sort of unique about Goldbaum and Partners is this effort to introduce what has been described as regulated high frequency trading. And Ryan, I have you quoted as saying here a while ago that, quote, "There's been too much of the Wild West. We're merging the new world with the old world where institutional money comes from." So what does regulated high frequency trading look like as opposed to unregulated?
I'll jump in here, since this is more a legal question. The regulated part comes from that we try to create an environment where the investor can feel safe to invest in. Besides the assets group that we're talking about, in this case cryptocurrencies, you need to make the investor first comfortable with the structure and with the people and with the corporate governance basically within the structure. And that's what has been the big problem with cryptocurrencies. It has had a bit of a outlaw image, so to say, because it was used in the beginning obviously by many criminals, even though the majority obviously has not been used by criminals. It has been used, and that was highly advertised, or how do you say that, mentioned in the news, of course. Now,
Yeah.
so what we have tried to do is to create a traditional fund, whereby we have the segregation of powers, in a way, the trias politica concept, where you have the multiple parties involved that are all independent from each other. So we have a fund where we have an independent director who needs to check if all the trades and all the things that we're doing are according to the PPM and according to the law. Then we have another party that is the fund administrator that will check and calculate everything, and will have access also to give orders. And then you have the managers, or the traders like ourselves, that basically can provide our trading services, but cannot do payments out, so to say. So even though it's our own structure, we will have to request approval from the director and from the administrator to do some payment. Say the fee payment to ourselves. We say, okay, we calculated this much is the profit, this is our performance fee, please wire that. We cannot take it ourselves, because that way we always have a third party involved that needs to confirm and say, oh yes, it's correct. And that way you can extract money basically from the structure. So this way we have created a structure, and then on top of that, sorry, I forgot, on top of that we have BDO at the end as the auditor at the end of the year to check everything.
Okay.
So that way we have created a regulated environment, authorized by the Gibraltar Financial Services Authorities, which can go out in the world and say, I'm a regulated fund. My underlying assets are digital. Well, we say digital assets. Most of them at the moment are cryptocurrencies. But the Gibraltar authorities have said, yes, we have checked them, and they have all the right checks and balances in place, which for our investors is, in that case, a safe place to invest when it comes to the people side of the business. Now, obviously, the asset side of the business, cryptocurrency is still a highly volatile market, but at least we have a approach in there that created the safest environment possible for outside people, and now it's only the trading that can be a risk.
Okay, I see. So what kind of challenges have you encountered as a firm that's doing high frequency trading in the cryptocurrency market, in a regulated way? Obviously you're seeking out, liquidity providers and exchanges that are also, regulated and on the up and up. But have you had any challenges, logistically speaking, when it comes to finding liquidity, for example? I know you mentioned that you particularly are seeking assets that are undervalued. So, what have those challenges been like?
Well, we have a number of operational challenges, since it's not such a developed market yet. You always look at liquidity issues. The different coins don't have all the liquidity in the market that you would need to apply our strategy, which is high frequency trading. So there needs to be a lot of liquidity, otherwise you're becoming a market maker, which will then be counter effective to our algorithms. So that's one. Then it is also the level of professionalism from several parties. Exchanges, for example, that have not yet fully developed into an exchange like we know them from the traditional world. It all has its child disease still in there. So we're finding out how, what, where, when. And then on top of that, you have the acceptance of the traditional world of this type of business, meaning mostly in our case, it's the banks that are basically saying like, okay, you are a cryptocurrency trading, even though although you're regulated, you're trading cryptocurrencies. We don't like to touch it.
Mhm.
We have banks that say, okay, if we wire money to this fund, oh, it's the cryptocurrency thing. Are you sure you want to invest in this? To their own clients,
Right.
or coming up with additional requests to prove that we're not one of those people that they saw in the newspaper a couple of years ago that was doing using cryptocurrencies for criminal enterprise. Um, so you also have those just silly questions for people that are just not yet up to speed on this business. So those are the operational issues. Then I think on the trading side, it just you don't have that much depth in the market yet, as you might want to have to diversify your strategy fully. Meaning, if you do euro dollar trading, there is an endless supply of euros and an endless supply of dollars. Bitcoin itself is predominantly what the cryptocurrency market exists out of at the moment. I don't know exactly the numbers, but it is at least more than 70%, I think, in the market is at this moment Bitcoin. So if you have one of these major currencies in there, then everything is always a derivative of the Bitcoin automatically. So you always have to deal with trying to fight off the liquidity issues and the diversification in your model so that it is a sound trading strategy that you're applying.
Right. And speaking of these, I mentioned a few minutes ago, those undervalued assets. How do you, how do you determine that something is undervalued? What are the data points, or the specific things that you're looking for when you're evaluating an asset that will show you, okay, this is something that we're interested in, even though markets aren't necessarily interested in this yet?
That's a good question. Well, basically, we see that there's volume within that particular coin
Okay.
at time X. And before we see it as manual traders, our computers, our algorithms will be all over it. And by clustering all that data together from the several exchanges we are involved with, not as dedicated market makers, but under the radar, we are sort of market makers because we provide a lot of liquidity. We will see that there is movement going on within that particular coin, and then we have the chance to go in and out as fast as possible.
Okay. What's on the roadmap for Goldbaum and Partners over the next year?
Fundraising mostly, I would.
Okay. Oh, I think I lost you. Can you hear me?
I can hear you.
Okay. So yeah, now you're back. So sorry. Can we start that question over? So what's on the roadmap for Goldbaum and Partners over the next year?
Short term, it is fundraising at the moment. We started our initial subscription period after a very successful proprietary track trading effort. We now are taking in money into the fund. We're now taking in converting the ones that we have in our proprietary track trading part, which we've done to test everything, and our own money at the moment is all being converted into funds. That's a bit of a legal exercise for AML purposes, money laundering purposes. But once all of that is done and and the fund is fully launched, then it is a diehard fundraising effort, basically. It is already difficult to launch a fund in general. It is already difficult to convince people that cryptocurrencies are interesting, and now we have to convince people that they have to invest their money into a fund, even though regulated, into cryptocurrency in Gibraltar, in a relatively new company. So all these roadblocks we have to overcome, which is basically all that I'm focused on at the moment.
Okay, so what are your plans for, how are you strategizing to overcome those roadblocks?
Well, we first talk to investors that already are affiliated with cryptocurrency or have an experience with. So they are the ones that either already made a fair profit out of cryptocurrencies. And those ones are the ones that we hope to back us, and so far they did. Obviously, you have friends and family around, so it sounds a little bit homey, but it is something that works quite well. And then we have our own assets that we put on the line. And with all of that, we basically have created a proprietary track record, which we are using to convince the broader public.
Right, I see. Well, you guys, thank you so much for your time today. This has been a really interesting conversation.
You're more than welcome.
Yeah.
Pleasure was ours. Thank you.